Holy crap, ladies and gentlemen, AMC stock is up 11.2% at the time of recording this video. What in the world is going on today? What do you need to know? Because, in fact, at one point in the beginning of trading, you actually hit a new multi-year low of $3.58 per share, and then almost like you snapped your fingers and it all changed. So, what happened? Now, is this going to continue? These are questions that a lot of people have that we will talk about here in this video. I will provide my opinion. As I have said before, and I will say it again, I do think right now is a very attractive time to be buying AMC stock. Because why? I do believe Adam Aron has no choice. His hands are tied, but to give you a commitment to not diluting shareholders or something else to cause AMC stock to rally, because Adam Aron, AMC, they want to raise capital. They cannot raise capital at $3, $4, $5 per share. You cause a lot more damage than you do good. So we're going to get into what's going on today. All of the data you need to know. Short interest is indeed rising yet again. Hit the like button as well as subscribe to the channel, and let's get started. So AMC stock is up 11.5% now. I think what's really going on here, because I'm just going to tell you up front, there's no specific news that is causing this today, but you can actually see that the entirety of really the Russell 2000 today is doing pretty dang good, right? Russell 2000 is up about 0.5%. This is in contrast to the S&P, which is slightly red, and the NASDAQ, which is down about 1/3%. It really looks like your chip names, your AI names, are the stocks that are getting sold today, and your stocks that are getting bought today are your small and mid-cap names, your interest rate sensitive names. Now, if you take a look at 10-year treasury yields today, they're down about 7 basis points today. So what we've seen recently is basically a straight up move in 10-year treasuries from 3.86% on February 1st, literally 5 days ago, to a high that you've seen yesterday of about 4.16%. That's the equivalent of basically a rate hike when a lot of your small mid-cap stocks have basically revolving credit lines as debt, where the rate kind of fluctuates based on what 10-year treasury yields do. When 10-year treasury yields rise, that makes it less attractive potentially to buy small cap stocks. So I do think it's interesting. You are seeing quite a pullback today in NVIDIA. NVIDIA is down 4%. SMCI is down about 4%. Other AI more chip names are also down quite a bit. And this can actually be somewhat of a sign of a good market as well, because our markets have been sick for a while now, where your average stock has been really doing poorly. Your Russell has been doing poorly, but the markets continue to hit highs, the S&P, the NASDAQ, and that's because it's really only led by a couple names. NVIDIA has seen a pretty parabolic rally recently, going from the low 500s to as high as $700. NVIDIA reports earnings not this week, not next week, but the week after that. And if you do see some weakness heading into NVIDIA earnings, and then maybe a last ditch kind of weakness following NVIDIA earnings, unless they give us something crazy again, which I wouldn't doubt, then you could see more capital go back into small cap stocks in the next couple week period. And really, when it comes to NVIDIA, who's buying NVIDIA at 660? I mean, if you did not buy NVIDIA during this whole run-up, right, even the recent run-up from 500 to 700, I don't think you're jumping head over heels to buy NVIDIA at $660 some per share. That's where potentially you get into the bubble losing its air kind of moment right here, because nobody's jumping in to buy the dip, the 4% dip on NVIDIA when it just rallied 45% to start 2024. And basically everyone has profits on NVIDIA. If you were super late to the NVIDIA story, you're still probably up a lot on your position. If you bought an NVIDIA after that first earnings where they really shocked everyone, you're still up like almost 100%. So again, I do think that's why you could see more weakness in semiconductors and some of your AI names. That does, again, allow capital to make its way into other areas of the markets. So that is what is going on with AMC. The drop in AI chip names, big tech, and the fall in 10-year Treasury yields today, both of those things are having this desired effect on AMC, pushing the stock up about 11% at the time of recording this video. So all looks pretty good there. Now you also have this, which is not great, especially for like a firm that reports earnings later this week. Credit card delinquencies surged in 2023, indicating financial stress, says the New York Fed. Credit card delinquencies surged more than 50% in 2023 as total consumer debt swelled to $17.5 trillion, the New York Fed reported Tuesday. Total debt rose by $212 billion in the quarter, a 1.2% increase quarterly and about 3.6% from a year ago. You're adding $200 billion in debt in 3 months. Wow, what a world we live in. Oh boy. Take those credit cards away, the economy would crumble tomorrow. Yeah, so not exactly fantastic there, but I think Wall Street likes spending, clearly. So that could also be having a positive role to play on small cap stocks today. Now, give this a sec to refresh. And wow, it's actually pretty interesting. Look at that. AMC stock is up 11%. It seems like almost everyone is bearish. It's been a long time since you've seen this. Sentiment is at 0. So extremely bearish. 0 out of 100. That doesn't make a whole lot of sense. Message volume is extremely high at 99. Yesterday it was 66. And the participation ratio is at 47. Now, I do find this interesting that it's extremely bearish today, the sentiment at least, when AMC stock is up 11%. That doesn't make a whole lot of sense. It could be seen as bullish, though. As I've said before, the message volume, that's what I like to see as high as possible. Sentiment varies day by day for reasons, you know, for this reason or that reason or that reason. But if the sentiment is really this bearish today on StockTwits, then, I mean, you could probably see more people get bullish on the stock, which could lead to more upside. Now, when AMC does go through these upside kind of intervals, if you will, AMC stock can tend to rally a lot. So don't be surprised if you do see a large rally in AMC stock from here. That would not surprise me, not even in the slightest bit. AMC stock for the first time today is now no longer oversold. You've been oversold ever since about January 3rd. So basically the entirety of 2024 so far. Now you're at 35.99 on the RSI, which is a sharp turnaround from yesterday's number at about 22.5. So big move in the RSI today. Potentially going to bring in some more traders into AMC, and at this point, any buying pressure is going to be good news for AMC. Now, let's take a look here at the Ortex data. I find it interesting, yet again, you're continuing to see the short interest percentage of free float climbing now to 11.32%. It's kind of been climbing every day pretty consistently, and this is good because anyone that's looking at AMC saying, wow, AMC's up 11% today, they're going to look at the short interest and they're going to see it's 11.32%. That's not crazy high, but it's high enough for some kind of squeeze, right? Now, if you're an investor in this community, you probably suspect the short interest is a lot higher. I think it's 200+%, but not everyone does. Not everyone is in this coveted group. So they're looking at this number. The higher that number, the better for AMC and a potential short squeeze. Now, you do have $104.09 million worth of short positions. Days to cover 1.53. 28.36 million shares that are currently sold short. Shares out on loan, 29.3 million. Cost to borrow, you do have 7.26%. Utilization of 43.68% and a short score of 61.75 out of 100. Now, taking a look at the percentage of stocks above their 50-day moving average, again, this is interesting. This is actually great news because, again, I want to show. You can see the Nasdaq's down almost 0.5%. The Russell's up 0.5%. Percentage of stocks above their 50-day moving average is actually up 2.84% today to 49.61%, basically 50% of stocks. You have been seeing the average stock declining since December 28th. Basically straight down from 86% of stocks above their 50-day moving average to a low of yesterday at about 46. The low was 44.5% of stocks above their 50-day moving average. So you have dropped or retraced about 50%, over 50% of the increase that you had seen in percentage of stocks breaking above their 50-day moving average. At the same time, the S&P 500 was hitting a new all-time high. Now, the S&P is still hanging out up here. I do think there is going to be more weakness in the S&P over the next couple of days. I actually think NVIDIA earnings could spark a lot of weakness potentially in the S&P 500, as it could be a, sell the rumor, buy the news, buy the, buy the rumor, sell the news. Could be one of those things that could play out. Now, normally NVIDIA does kind of rally into earnings and then kind of sells off for a period of time, sometimes a couple of weeks, and then you can get a larger move higher. Sometimes NVIDIA will rally like 10, 15, 20% on earnings too, and then give it all back by the next day. You actually seen that happen. Not last earnings. NVIDIA was actually red last earnings. Kind of did the same thing as well. Was up a lot and then came right back down. But 2 earnings ago, you were up like 10% at one point. The high was 502, and you ended up closing at 471. You had gave back a 10% gain you had off of earnings. So I do think that is pretty interesting in regards to young NVIDIA, and 4% down on NVIDIA is quite a momentum shift. So that could actually be a healthy event for our markets nonetheless. So taking a look at the Stocko tracker for AMC, as you know, today is Tuesday. We are going to have more earnings throughout this week. We are going to have more data and more Fed speakers. If you do see a rally start, and this is the start of a larger rally, the option activity will definitely play a role in AMC. Probably partly why AMC stock is up 11% today. You do have calls in the money of 23,577, calls out the money 47,471. In the money puts 8,121, out the money puts at 19,962. So you now have a lot more calls in the money than puts in the money, and you do have over double, almost triple the amount of calls out the money compared to puts out the money. So overall, this week's looking pretty dang good if we want to continue to see a rally and see options actually play a role in potentially driving the stock higher. So there is that. That's pretty much all there is for the day today. Again, I wish there was any news that I could bring to you guys. There's not. There's been a lot of news recently, like investors are buying AMC bonds, which I think was kind of a foreshadow for this rally to happen in the equity, because if people are buying the bonds, that means they're confident in AMC's ability to survive, right? You don't buy unsecured notes on a company that's going to go bankrupt at 7 or 10%. It doesn't even matter, right? It's not gonna do that. So that was showing a lot of confidence that the business will survive, and it was likely only a matter of time before that eked its way into a big gainer for the equity itself. If you take a look at the 10 and the 2-year yield curve, inversion still inverted 29 basis points. We were inverted a lot less than that, right at about the Fed. You were inverted 16 basis points. I believe that you could have seen an uninversion, but we did not get the market starting to price in more cuts from the Fed. In fact, markets started to, unprice in some of what we have priced in over the past couple of months. So that is also pretty healthy. I do want to point that out. as well before we go ahead and wrap up this video. Markets went from pricing in 7 rate cuts to 6 to 5. Now, if you take a look here, markets are pricing in. Let's just go ahead and refresh this so I know we have the most up-to-date information. Markets are pricing in 1, 2, 3, 4, 5 rate cuts, 38.5% odds. But your odds of 4 rate cuts have jumped a lot as well. Now that's at 25.7%. So you're getting pretty close to, starting to price in 4 rate cuts, and that will be really good, right? Because I don't think we're getting 4. I don't think we're getting 5 rate cuts. But when the Fed has to push back on that, if we're pricing in less, it might not be as bad as it otherwise would have been if we were pricing in like 7 rate cuts, right? So all these things we're talking about is healthy. The fact that chips and AI are giving it up, stocks like AMC, some of your small cap stocks are taking a turn here, seeing this rotation in the markets is actually very, very healthy. Let me know what you think about this down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.